Welcome back to another episode of Investing Explained. Here's today's question. Years back, I taught a group of freshmen in college, and I've been asking myself the very same question as you were asking here. If I only had one lesson to talk about investing, I would talk about valuation. And I wouldn't confuse them with a long formula or Bill Nygren's thoughts on stock picks, but more how to think about the value of an asset. So I might ask the students to argue whether they would rather own stock in Starbucks or Walmart, and let them work in groups for 5 to 10 minutes to discuss it. And you might hear that someone would say that Starbucks is better because it's coffee, they just like the product better, the location is better, or they might say that Walmart is much better than Starbucks because that is where they do all the grocery shopping. But the important thing for you is to ask the light bulb question. What do you get if you own one share of Starbucks or one share of Walmart? And from there transition into a discussion about what to pay and what you get having ownership in one of these securities. It's so important for not only students but for all of us to understand how to think about what something is worth. And you can also discuss bonds. Ask them, if they lend money to the person right next to them, which interest rate would they charge and why? And ask them, if they were lending money to the government, how much would they ask for in interest and why? So if you only have one lesson and not a course, I would really focus on how to think about valuation and teach the students to ask the right questions to themselves when making financial decisions about ownership in securities.
I absolutely love this question, and I'm kind of excited to piggyback on some of the stuff that Stig was saying there. What I would tell you is find a company that everybody knows, whether it's Apple, Google, whatever. Go to the financial statements and you can see the numbers, and the numbers are huge. They're, billions of dollars. And what I would tell you to do is just take all the zeros and just move the decimal point way to the left and come up with a really small number. Let's say that the enterprise value for one of these companies is $100 billion. What you do is you basically turn that company into $100 market cap. So when you look at the financial statements, it'll be things like $50 and $75 and whatnot. Mark that down on the chalkboard and then tell the students that it's just this tiny little lemonade stand or some little business that somebody their age would be, they're selling seashells at the beach. I don't know, something that would make sense to them. And have them figure out what they think the value is of that little $100 business. And then after you teach them that methodology in terms and conditions that they understand, I would tell you then to show them that the numbers that they were actually using were the same exact numbers for a company like Apple or Google, but you only moved the decimal points. And so then you teach them how shares are broken out into things that makes sense. And whenever you look up a stock ticker and it says it's $70, well, it's $70 at a proportional level for the entire business. And I think that if you would maybe use an example like that, it would just be so obvious to them how it works. I also agree with Stig about the importance of understanding how bonds work. In my experience with talking with various people know bonds are debt, but they just don't understand how they function. They don't understand that if interest rates go down, the value of a long duration bond goes through the roof. They don't understand that. And it's really, really simple if you just kind of lay it out and demonstrate to the students how it works. So what I would tell you to do is make a little coupon book. Because back in the day when you'd buy a bond, you'd get a booklet of coupons that then you would rip off the coupon and you'd mail it in order to get your coupon. And so when people go through the physical event of sending in a coupon and seeing how it's paid, and then you could change the interest rates in the environment of the room and see how the kids would react to somebody who's holding a coupon book with 10% bond, and now the newest bond that's on the market is a 6% bond. And just see how in the aftermarket, whether they can adjust the price on their own and then it'll all make sense to them because they're physically doing it in the classroom. I would be so excited. In fact, if you would video this and send it to us, we will post it. We will put it out there for people because I think there would be so much learning that could take place on so many different levels with this scenario. So outstanding question. Absolutely love. This might be my favorite question that we've ever played on the show. And I'm very curious to see how this works out if you would attempt some of those scenarios.
That's it. Preston and I will continue explaining investing, so go ahead and hit that subscribe button.